What's up traders, if you are new to the channel, I would like to welcome you. I'm a top author on the TRADINGVIEW platform and I'm a swing trader. In this video, we will be breaking down GBP CAD. We will be making a full breakdown of the pair and there is a lot of lessons during the breakdown that I will present to you. If you still haven't, make sure you download the free training I have basically linked below this video. And without further ado, let's get into the charts. Okay, so here on the charts, the first thing what we need to speak about today is the complete breakdown of GBP CAD, and it will be filled with also educational content. Now, the first thing that we have to ask ourselves every time we're making a full analysis on a pair is what kind of patterns the market is creating, and secondly, are we in a support or resistance area? These are the two things you always have to ask yourself. So from a pattern perspective here on the monthly time frame of GBP CAD, we first need to realize that the market has created this M formation. The market started here, went up, and down. And this is the reason for which I told all of you guys, be aware that this push to the upside is about to happen. Why did I say this? Because that is how this pattern works. If you have an M formation, the market will make a push back up to the neckline. And as you can see, that is exactly what happened. Now, what do we have at the moment? We know which pattern the market created. And the second question, as we have already said, is the market in a support or resistance area? Now, by definition, the neckline is a resistance area because it is an area of previous support. As you can see, the market found support around this area, now turned resistance. So we have created an M formation and have already retested the neckline. Plus, we have previous support, turn resistance. Now, what the combination of the two of these patterns basically creates is the possibility to create an impulse correction pattern, meaning that the market makes an impulse to the downside, retraces to the neckline, and then continues to the downside because it finds the liquidity for the push to the downside from this area. So overall, we have an impulse correction pattern when the market goes for a retest of the neckline. And in this particular case, it is a monthly neckline. So the second thing we have to check, the third thing we have to check, is the Fibonacci. What kind of Fibonacci levels the market is facing. So as you know, if we want informations on this retracement, and by informations I mean which are the strong levels in the market when the retracement will basically continue, the easy way to find these levels is just to take the Fibonacci on the impulse leg. So if we want information on this retracement, we need to take our Fibonacci on the impulse leg. So basically from this high to this low. By doing this, the first thing you quickly realize, I can also make it easier for your eye by deleting the unnecessary levels. You can immediately realize that what the market is actually rejecting is the 50% Fibonacci. And this 50% Fibonacci is exactly at the neckline of the M formation from the monthly time frame. So we have a very strong confluence of the 50% Fibonacci and the neckline, which is the previous support turn resistance. Now, strictly speaking, the 50% isn't really a Fibonacci level, but in other words, is half of this push to the downside. So basically the 50% retracement is basically 50% of this push to the downside. So exactly at half of the push from the high to the low. And the 50% is a very strong level. Many times the market goes down, makes a retracement half of the move, and then continues the push to the downside. Now the question is, why does the market even need to make these retracements in the first place? And the answer is very simple. The market loves to make pullbacks to generate liquidity for its pushes because it can't just keep going straight forever. It will need to make pullbacks to then fill in the orders again and continue the push to the downside. Now let's go on the weekly time frame and continue with our analysis. From the monthly, we are overall bearish on the pair. Now here on the weekly situation, as you can see, is different. Why it is different? Because on the weekly we are still in an uptrend. We have a low here, we have a high here, we have a higher low, a higher high, a higher low, and a higher high. So a market that is creating higher highs and higher lows by definition is in an uptrend, and a market that is creating lower lows and lower highs, by definition is in a downtrend. So overall, from a weekly perspective, GBP CAD is still in an uptrend. So what do we need to see from the weekly time frame before we can execute a position is a strong rejection to the downside. And by strong rejection to the downside, I mean that on the weekly, for the market to be clearly ready to start the next push to the downside, we need to see a close of the market back below this area. Now, why back below this area? Because closes in the market are very important. Now, if you go to the line chart, so you switch to a line chart, you will see that you will have some basically this kind of edges in the market. These edges are the closes in the market, so weekly closes. And the weekly closes will basically give you the bodies of the candles. As you can see, if I switch back to candles, you will see that this horizontal array is exactly at the start of the bodies of these candles, and these areas are extremely accurate in the market, and you can see that that is exactly where the market rejected at the beginning of this week. So basically today the market went to retest the area and continued to the upside. Now, since from the monthly time frame I overall see basically we have overall bearish technicals, I was not interested in this long. I was interested in seeing if it will break below this area or not, at least on a daily closing basis, because at the moment from the monthly, probabilities are more to the downside, and as you know, trading is a game of probabilities, so we need to stack as many odds as possible in our favor. At the moment on the weekly, everything is still bullish, so obviously we cannot short. Going down on the daily time frame, the reason for which I expected this pullback to this area is for the simple reason that we had this W formation. And as you guys know, after W formations, the market will make a pullback to the neckline. And as you can see, to where the pullback was, exactly the neckline. As you can see, the neckline was here, and this is exactly where the market went for the retest, showing you that the market is very precise in respecting its rules. And now the market is pushing to the upside. So how can we determine when GBP CAD will be ready to make a push to the downside and when we will have stronger probabilities for a push to the downside rather than a continuation to the upside? Because we know from the monthly that overall we're supposed to continue the push to the down, basically start a new push to the downside. Now from the daily, since we know that we have very strong support around this area, what we will be waiting to see is a red candle that closes below this area. So basically, once the market will close below the area, then we can wait for a pullback and continuation to the downside. Now when this pullback will come, what we will do is very simply drop on the 4-hour time frame and look for an entry inside of this area. And what I mean for an entry is basically wait for one of our valid entries on the 4-hour time frame to our direction for the push to the downside. But at the moment, obviously we cannot short because the market from a pattern perspective is still long. Now what would, on the other side, let's first go on the 4-hour time frame and then let's speak about what will invalidate the bearish view from the monthly time frame. So here on the 4-hour time frame, it's pretty clear that what stopped the market was also this previous resistance on the 4-hour time frame, now turned support with this impulse correction and impulse pattern. So basically, this push to the upside from a 4-hour perspective was very simple to determine. However, since we knew that higher time frames were bearish, we were waiting to see if the market would have failed, and then the continuation to the downside would have been very easy. But at the moment, everything is still bullish on GBP CAD, so we cannot short it. Now let's speak about what will invalidate the short scenario on the monthly time frame on GBP CAD. So what would shift everything from a bearish side to the bullish side on the monthly time frame on this pair is pretty simply a break above this monthly close. So going on the line chart, you will get this monthly close, and if the market will close the month above this area, so basically if this green candle continues to the upside, and I can put it really exactly on it, but anyway, if this green candle continues to the upside and breaks above the level, then at that point, overall, we're expecting continuation to the upside on the monthly time frame, and on lower time frames, it will be easy to take the long. but at the moment on the weekly we are bearish, on the monthly we are bearish, on the weekly we are still bullish, and on the daily we are still bullish. So what we're waiting for is a break, at least on the daily time frame, below this structure area here, and once the market will break below this area on a daily, at least a daily closing basis, then at that point, once we get the close below here on the retest of this area, we can expect continuation to the downside. And the way in which you will be able to determine the entry on GBP CAD will be pretty simply inside of this area, dropping down on the 4-hour time frame. You will be able to see if the area is now acting as new resistance or not. If you will find a valid entry on the 4-hour time frame for a short, then it will be easy to take it. If instead on the 4-hour time frame, once the market goes back inside of this area, it continues the push to the upside without breaking any structure basically to the downside, then obviously you will not take the trade, and because the probabilities are not on your side. And in the end, as we already said, trading is all about stacking as many probabilities as possible on your side.
If you enjoyed the video, if you did, make sure you leave a like and comment below and let me know if you actually took value from it. Make sure you click also on the link and take your free training, and make sure if you haven't, it is the first time you see this channel, make sure you subscribe to keep getting free valuable education and analysis. And I will see you in the next video.